But when you look at that channel, like
Yeah.
she looks a bit. No, Devongi's not. I'm not
Ish.
satisfied.
All right, guys, welcome to our live session. Okay, featuring my missus today. She's with me. But anyway, not wasting any time. All right, let's take a look at what we've got going on. So I'm going to give you the same setup that I gave to the Wealth Group Academy students today. All right, I apologize, I haven't been on for 2 days. I had a little bit of some stuff to sort out, so I couldn't be on the live. All right. But what I want to do anyway is I want to go over here and I want to do the type 1. All right, so we have a type 1 induction over here. Okay, and if you're not familiar with the teaching, I did a series on it before. Now, what I would say is that with this right here, all I'm looking for is the price to break market structure. Now, on the H1 would have been the best, but on the M15, we do have a break of market structure. And one of the ways to be able to tell if the market is using this price point as a reference is how the price behaves around it. So if we take a look at this in more detail, right? So just for those of you coming in, we have a H1 demand order block. I had an alarm set here. Obviously, I don't have the proof of it now because the alarm has rung more than 5 times, so it's not going to show. But I did put an alarm here during the earlier the days when I was in the programming teaching classes today. As I said, stay tuned. I'm going to be putting some, I've been developing some programming courses for how to build robots, MQ04 and MQ05. So you're going to see that pretty soon. All right, so we have this type 1 induction over here. This is the market structure break swing high that I'm looking for. Now, we need a swing high market structure break of a movement before this wick movement. Now, this one happened at 130 because of the GDP news and all the rest of the high impact US news. That kind of conglomerate of news triggered this spike, which for those of you who understand how markets work, you would have known that the price would have done something like this before taking off for a long. Pretty typical stuff. The price, if you notice, at these high points here, the price didn't interact with this market's or this key swing high point during the end of yesterday and left equal lows over here. So the price doing this before 130, there was no way it was going to shoot above here without taking these lows down here. Pretty common market strategy. But we have this strange looking area here where we have the low and the high not even touching, but those are very far apart. Okay, this is when we have very high volatility coming into the market, we get things like this. So price will have to correct that and go the other way, which helps to add to the reason of why we want a long. Now, if you look at the price action, look at this wick here, how it interacted. So we had a strong close above here. Zoom in a little bit more. So strong close above here. And then on the second candle after, so 1, 2, price touched right back here and took off again. So this lets you know that this swing high is a respected area of price. Not only just that, but this swing high too, because this swing high is another one before the price took the low. So we could use these two here. And if you put a little range here with these two, let's get this right. Here we go. So look at this range here between these two highs. this lets you know that price is on its way for, let me just put this in, is on its way for a interaction here of some sort. Now, for me, I do expect the price after breaking market structure to find some sort of demand order block to come back into. I'm really hoping that the price will come back to this last 15-minute order block over here. All right. Since the price has already taken the equal lows here, I'm not too fast. But the price coming back here one more time is what I'm looking for, which is why I've got an alarm not too far away. And then I'm looking for some long targets. Now, for me, if you've been trading gold like I have, gold has been very good to me, helped me to pass the first stage of a challenge that I've just taken up. If you take a look at these three highs right here, these three highs, we have a sell order aggregate, and it also lets us know the order flow direction that we've got going on. Now, this trend line step structure that the price has created is a liquidity pool, okay? It's just not the equal high form, okay? So this is a sell order aggregate here, which I expect gold to break past. And really what I'm looking for with gold, if I was to drag this out, is you can see this small order block here. We have right here, we have a fair value gap. Now I'm using terminologies that come from what we have with ICT teachings because it does apply here. But we have a fair value gap over here, right? That I'm expecting price to get back and fill and then get into this supply order block. Now, if it does any more than that, that would be great. But I'm really looking for targets about here, then I'm going to come out. Now, if we get this right and price does use this 15-minute order block here, and we get a stop loss beneath here or beneath here, I mean, the lowest down would be here. I don't want to have a 50 pip stop loss, but the tightest we can get it would be great. So 40 pips I'll take, and to get 336, to say 336, 340. All right. So as a risk to reward, it's about 1 to 7.5, which is not bad. Okay. Now, if we use lower time frames like I like to do, so for M5 and M1, we can even get it down to even some smaller values. Now, the good thing for me, which is what I much more prefer, is that I like to look at price every hour because during every hour, we have different parts of the world opening and closing and etc. Not every hour, but almost every hour. So these changes do aid us in our, endeavors in looking at price action. So what I'm looking for, if you're wondering, is I'm just looking to see that price is going to close above this H1 order block and hopefully also close above this high that was created during the news spike, because that puts us in a position now where the price is going to come back to this point of reference, which is why it's hanging the way it is. And then once it comes back from that point of reference, I want it to pull back down and then give us the long. And I'll be ready to take a very strong long from here. Yesterday's news gave us a very big fair value gap, almost 200 pips worth. So I'm expecting the price to come back and fill that, which is again why I know the price is just hanging around this area. It doesn't seem to make sense, but if you've followed me for a while, you know why price is doing this. And then we should get the pullback. Now, at 3 o'clock, what I am going to do is I am going to add an extra additional piece of confluence. And what I'm going to do is, now there is a side to me that might try to get into this early. I'll explain what I mean. Equilibrium is right inside of this H1 version of the order block here. This whole thing is the H1 version. Now, the optimal trade entry, if the swing high remains as it is below this order block. And as much as that is not bad and it can happen, it may not happen. And in my experience, sometimes entry might be here, stop loss might end up being beneath this body right here, and then we go for a long. Okay. Now, if I keep the equilibrium point as it is, and we take a look at what's actually there, now you see that there is already a demand zone hanging somewhere around this area, and this is on the 5-minute. Now, the reason why I can use the 5-minute like this is because gold moves pretty much like 5 times as much as Forex pairs, so you might get that, extra bit of a movement there. So, with that being said, on the H1 and then down to this M1 time frame, I do see this little setup here that might work, which is the price didn't get into this demand order block on the H1. And the reason why I'm able to use this so freely and not have to question it too much is that this H1 order block, if we're going to the nitty-gritty of what happened with the news, all right, at 1:30 on the dot, the price formed the demand or sell candle that ended up being an order block. then a very strong wick down, which is what triggered the induction. The next candle in the next minute, of course, gave us this movement here straight after that. So the source of liquidity from the demand perspective on the hit M1 is inside of here, which the price failed to do. So I'm looking for the price to most likely dip down here, maybe even give us the 62, which is still in range. And if we're even lucky, we might get the price coming back down to OTE. But if you study it from the M1, the OTE point is literally at the end of here. So I don't think there's a high probability. I know it sounds strange because the lower the down, better the probability is for long, but not always. I'm still being a bit taken with a pinch of salt. What I may do when it gets to equilibrium, I look for the price to get beneath here. I'm going to get in either here, or if it's moving fast enough, maybe I can get in at 62. And I'm going to put my stop loss down here at just a little bit down here. Because on the M1, there's actually no candle bodies here. I mean, if we had a 15-second or 30-second chart, maybe there might be. I think you can get that on TradingView. But I think for me, my entry is just going to be here. Now, you can see the price of how it's reacting right now, 5-6 minutes before the news. I mean, before 3 o'clock. My hopes is for something down here, or even if we're lucky here, stop loss will go literally about 20 to 25 pips beneath, and that's me done. I'm not going to put it down at the wick because I don't think the price is going to re-reach the wick. I don't think that's really going to happen. This wick, the nature of it, as you can see from the length, in the Wealth Group Academy, we'll call this a level 3 induction. In other words, the price was not looking for it for to be friends to anyone. It was literally just looking to wipe out everyone and then go the other way. Okay. So that's kind of like my idea, what I've got for the structure here. Now we still got 6 minutes on or 5 minutes until the price moves. So, and you can see it's really heating up. So the more and more I look at this, I think I'm going to stick to my 62 entry for this. And lowest stop loss is down here somewhere, 20 to 30 pips or 25, as I was saying. And then we're waiting for the price to come back in here. So I've got my alarm where it is. As soon as I hear that alarm, if price gets there, I'm in from there. I'm not going to try to go for an OTE entry. I don't think that's likely to happen. If it does happen, it's great though. But I think what I'm going to do is just to cover up myself, the entry I get in this range here, I will at least put my stop loss at the low of yesterday, because the low of yesterday has definitely been obliterated. So any sell stops beneath here definitely have been eaten up. And I think the price is good to go now. So that's really my trade, basically, my setup. I had a little setup on Bitcoin as well, which is the opposite of gold. We want a short here. Price has been in accumulation, took the high of yesterday. We have this market structure breaking, the price has kind of got into here. So I was actually looking for a short because I do think fundamentally speaking, now I hope that's not the alarm for gold. Okay, it's not. It's another alarm. Okay, it's my alarm for the US 30. All right, so I wasn't going to US 30 yet, but the US 30, guys, if you haven't been on a live before, I was talking about this very interesting demand order block here. This demand order block is like the gatekeeper of one of the biggest shorts we're ever going to see on the US 30, okay, apart from lockdown. Because from October all the way throughout into November, the price was literally just going one way. So my thing is that looking at the US 30 from this standpoint here, the day that the price closes beneath this demand order block and returns to the other side will be the day that I'm going to be taking a very nice position on the US 30 or multiple ones and just riding the wave down short. At the moment, though, I just want to explain something, and this is where we need a monthly. So if you haven't been on the live, I've been discussing the US 30 that because it's in new territory, it's making a new all-time high. There's no reference points to the left at the same price level. Not that there's no reference points to the left, there's just none at the same price level. This is exploratory price movement. Whenever that happens, I usually use the monthly to mark a very key major previous price points. Like, for example, this high right here of 2021, 2022, I believe, or 2021. And yes, 2022, because this will be 2023 and that's 2022. Yeah. So that's what I will do. So that's one example. Okay. On the weekly time frame, if we take that information and we just look at what we've got with that now, my lines won't be straight because of course it's a monthly. All right. Now I prefer to use these lines than a straight line because sometimes it might be seen as though I'm using support and resistance, which I don't trade personally. So I don't want to bring any confusion here. So, all right. Looking at the price action here, I probably won't even fraternize with trying to trade the US 30 here. Now, at the moment, the price does look good. It looks like from the structure here that the bullish side of the market is kind of fanned out. And the reason why I had an alarm is because I was looking to take a US 30 short from this point right here when the price hopefully fills out the fair value gap. And the reason why is because the price took the high here. The only problem I guess I have is that the price took the high here, it has broken market structure. And you can see that even price over here is respecting the swing low, even into the next day. But because the price has done this lower down kind of move here, it is a little bit of a throw off. I don't know if the price would want to come back a little bit higher, but I'm still going to trade what I see. So if I do take this trade, my entry is coming up in a moment, and my stop loss is going to be above this high, which I'm going to do in a moment actually now. Now, my thing is that I wish that the US 30 followed correlation, with other pairs all the time. But because it doesn't follow correlation with pairs all the time, it does put a little bit of a throw off. All right. Now, the reason why I do want to attempt to take this short is because if you go to the 5 minute or 15 minute, you see that the lows here formed are perfectly equal lows, which means that the price is going to come down here at some point. And so that's why I don't want to leave this off of the table and not trade it. I know that it's a little bit of a one that's in a strange area, but I do think that the price is definitely going to give us something. Now, I hope I'm not missing my entry, okay? But I do want to take this trade. I think I might even just take it now. So I'm going to go on my other accounts and just trade it. So give me 1 second. I'm going to take this. If you want to take this now, you can. This live trade now. All right, it's at a good price point to me. All right. Now it's a little bit early. Let me just do something here because it's still moving long. Now with the US 30, it's something not to play with because honestly, the US 30 can continue moving into the I've seen it drop, many pips at like 8 o'clock at night, which in the UK is basically night time. All right. But you see that it's hit the OTE price point. That's good enough for me. All right. I'm gonna take it from there. And get my stop loss at the right spot. All right, I'm just going to drop something on there. So just give me a second, we get in. All right, I forgot. I thought that my account was blocked or something because I tried to put one lot and it wasn't working. Okay. All right, so I'm going to give it a few more minutes and then I'm going to get in. I just want to check on the H1 if it hit my point. I like to be very specific with my trades. So on the H1, the price hasn't filled the fair value gap yet. That's been left behind. So I'm not taking it until that gap is filled. Okay. Once it fills that gap, then I'll go for it. I know it's been too specific for some, but it's just that's how I like to roll. Because then puts me at ease to just take my trade and not look at it. I think that's another secret. I'm not gonna lie to myself. Sometimes, guys, when you take a trade, right, it's just better, in my personal opinion, to just take the entry that you always were looking for. And instead of taking the entry that was close to. Now, obviously, there are a few times where the price might be moving so fast that you've got to do that. But when the price is not moving so fast, like right now, the US 30 is moving at a reasonable speed. Okay. It is close to my entry, but I'm just going to give it a chance to try and get there. If after a few minutes, like 30 minutes, it still hasn't reached there, then yeah, I'll just get in if it's close by, right? But at the same time, I don't want to put myself in a position where I just chase everything. Okay. It's good discipline. So if it hits that point, I'll just put an alarm here again. If it actually fills the fair value gap, because it does have a meaning if the price closes that price fair value gap. It has efficient price action. So from that efficiency, we can get a new roll or cycle of movements in price. So I prefer to do that. Okay. All right. So another thing is that AUD/USD, these lows are equal here. And I'm quite convinced that the price is probably going to do a short. Now, I'm not going to take it here, but I want to give it a chance because I do think that AUD/USD is going to give this short down here and at least take these equal lows and maybe push it lower. Okay. Now, on the D1 time frame, whilst I'm waiting, the price just about clipped the low of the previous month, but the reaction afterwards hasn't been so strong. So I'm not too sure if the price is ready to actually want to go long just yet. But of course, if the dollar does fill that gap that we've been talking about, the liquidity gap, then probably it will. All right. So again, let's see what the US 30 is doing. All right. We'll see. All right. So close to OTE. It is dropping right now, but I'm still going to give it a chance and see what happens. Yeah. Again, a few pips out of, a few pips out of tune is not that bad. But if it does a lot of pips, then yeah, I'm probably going to have to get in. Yeah, but I'll just give it a chance and see what it does. Sorry, 1 second, guys. I'm opening up another broker, so Windows is asking me if I want to make it a client portal, so I can't see the screen just yet. So let me just set that there. All right, so yeah, so that's the US 30 setup that I have. I do think the US 30 is definitely going to do that short, but I want it to fill the fair value gap, in my opinion. It's the way to go. All right. With AUDUSD, I expect it to go short. It's already moving short right now. So if you want to get that, you can. I don't think it's a bad trade. I think it's worth the attempt, especially because these lows are equal. And the price took this high right here and then made its way short. It would make sense it would make sense to go for. Okay. All right, pound USD, I'm not going to talk too much about it apart from saying this. Remember, I told you about the buy order aggregate. So the price actually did take out the first wave, but it didn't take out all the lows. We still have an order block here after the price did this clean sweep of all these sell stop lows, right? And I'll show you what I mean. I'm talking from the H4 perspective instead of lower time frame, so you can see a slightly bigger picture. But the price didn't return to demand here. So when it got into this supply order block, gave us the drop here, then it's pushed even higher, and now it's come back down here. So my thing is I'm expecting pound USD at some point to drop back into this area. Till it drops back in this area, I'm not really too concerned about it. And to be fair, if the price closes beneath this area, it's going back down to these lows right here. These lows are equal, and we have this liquidity void to fill. So that's really kind of like my point of view right now. Okay. Now I'm still waiting on gold to see what it's going to do. USD CHF, I personally don't really like it that much. It was a good movement, and I think if you were on the live where I was just kind of running through things fast, these two equal daily highs is where the price stopped off at to do the drop that it did yesterday. And you can see the price is coming straight back up. It almost looks like, now I'm not saying that it can't happen, but I just personally don't like it when the price is moving short in every session. So in the US, Asian session, US session, dollar session, we just have one big short. Now, when I say I don't like it, I don't mean as in money wise, it's great, but I mean because in the Asian session, I guess there was low liquidity here, but usually there shouldn't be that much directionality going on in price action when you know it's the Asian session, but there was some directionality here already. So when that happens, I always feel like the price at some point is going to come back to correct that or fix that up and come back and take these highs and make sure the Asian people pay. It's literally that's how the market is. Whilst you sleep, they come for you. If you ever noticed in the Asian session, sometimes for you, if you're a UK US trader, if you're swinging a position overnight during Asia, the price is usually going back the opposite way from where you started out in the beginning. It just is what it is. Catch men when they sleep, right? Or men and women, because there are, no bias here. Okay. Euro USD, absolutely brilliant trade. Came into this supply zone, took the high market structure break, had the return to supply and just dropped. That was a textbook trade, but I wasn't watching it, so I don't even want to bother to ramble on about it. With USD CAD, I want to show you from my IC markets chart that there is a gap here that was left from yesterday's news. So I know the price needs to go short. The reason why I think I just haven't traded it, like I was saying this, is because I don't know, when I see equal highs at the high of the day, even though I know the price can still go short, it just is a thrower for me. I prefer just not to interact with it and find something else. That's just me. But if it does go short, if you are a USD CAD trader, right? There's this supply order block I'm looking at again on the 15 minutes where there's equal highs just beneath it and the price didn't return to it. So I'm suspicious of the fact that USD CAD, even though it came near and gave us this drop, is going to come back here one more time. if it does sustain and not try to take these equal highs, then it should do this. All right. And at that point, give us probably a few more pips beneath the low. So that's kind of like my view on the USD CAD when it comes to the charts there. All right. Now, the reason why I'm saying is going to do even more lows is because we have equal lows here, which is why I was a bit early and I took USD CAD short yesterday from here, but it took this high, it went short, but then it just kind of shot straight back up again. So kind of threw me, stopped me out. I closed it before it stopped me out, but yeah, I expect the price to do a little bit more. We have quite a few equal lows or relative equal lows down here is another set. So next liquidity void ending is here. So price may very well, with that drop on the US dollar, if it does happen to fill the gap, bring us down here. USD JPY has been finicky, but I know it is supposed to go short. You guys know the low I'm talking about already. This low right here, you can't see it from here, but if I go to the M15, the lows there are exactly perfectly equal lows, and it's the low of a day as well. So if I go over here, you see what I'm talking about? Perfectly equal low. So I know the price is going to get at least there once the dollar gets that short. All right. Now here you go. There's the alarm, guys. So you see, this is why I didn't take the trade. Now I think now that the price has got here, I'm willing to take the trade because it's doing what I want. Is actually filled the fair value gap. So I'm going to give it an attempt here. All right. And let's see what it does do. I'm in on my other accounts. You can't see it because I'm not trading on this one right here. I'm using my other account. So just give me a second. One second. I'm gonna have to use my phone for this one. All right, so yeah, I'll make a quick attempt to see what we get. Now, the price looks like it is let me see, 8 4 100. Let's see what happens here. All right, so we're gonna see what happens with this. I want to see what the price is gonna do. If it does give us a good trade, then that would be nice. If it doesn't, then you know, whatever it is happens, but we want to just give it an attempt to see what we get. Just give me a second. All right. Now I like the sound of the alarm going off because it means that, hey, something's going right. So let's see what we get from it. All right. If it doesn't work out, I won't be upset at all because I want to give it a try anyway. I just want to see what the price is going to produce with this trade. If it does produce anything. All right. If it doesn't work out again, no harm done at all to me. I think that would be we'll just go back to the drawing board again. All right. So that's that. That's the only other one I want to take for now. The main trade I'm actually waiting for is gold. It's not really the US 30. US 30 is just kind of like on the side. My real trade I'm looking at is I'm trying to trade gold. I'm waiting for that pullback. I'm waiting for the alarm to strike. I might put a second alarm just at the edge of this demand zone because I really don't want to miss that one because that's what I'm really looking forward to, if anything. Okay. And if it doesn't work out, then it doesn't work out. But I do like trading the US 30 though, because I find even on funded prop firm accounts, US 30 doesn't really have any commission to it. I like that. So it's kind of like a nice preference. It's my own little preference there. All right. But yeah. So this is it, guys. The last thing I did want to do is go for the dollar index with you also. I'm going to do it really quickly. I'm just trying to give you guys a bit more time because I know how much I didn't spend the time with you guys in the last 2 days. So yeah. So this is now I can hear myself because I unmuted the thing by accident. Sorry about that. All right, so here's the dollar index, guys. I have some additional markings that I'll show you the updates of why I'm looking at this. Now, again, if you've never been on this live, the reason why, okay, first of all, okay, first of all, we had this high right here, weekly high. Let's go and do this. These weekly equal highs are in view, along with this liquidity void that needs to be filled out and this smaller one here, unfulfilled efficiency. So there is room for the dollar to give us a trend in long. The only thing that's making it hang around, and I'm convinced of it now, is that we have this liquidity gap on all dollar index charts that needs to be filled out. Now, the price cunningly looked like it was going to go there, and I know it threw off a lot of traders, all right? And I'm not being prideful saying this, as in, I'm going to say including me, not like I'm the best of traders, but including me also, I kind of got thrown off by this too. Like, I really did think that the price was going to do it and then start going long. And in the grand scheme of things, there needs to be a short because we've broken past the supply order block. We had accumulation, strong break. We need a return here to officially flip this order block into from a supply zone to a demand zone, or a supply order block to a demand order block. And to be fair, now that we've got that going along, my idea is that I'm looking for the price to give us something of that sort. Now, if the price doesn't want to give us this movement, I'm not going to be upset at all. But I do want to see the price give us like at least some sort of trade, some sort of something going on. All right. And the short that needs to happen, I kind of figured out my diagram of what I want the price to do or what I expect it to do. So I know I've got so many little boxes everywhere, so it might be a bit strange to look at, but I'll change the fill color to something like pink so you can see which one I'm talking about. So this pink order block we've got over here, right? This is the demand zone holding the price from dropping beneath this area. And you can see that it's a very strong area because the price wicked down all the way here, but it still managed to cling on to this point right here. Okay. So my kind of thing that I've got going on here is that I would like the price to close beneath here. I think the easiest trigger to go for that will make this work is if the dollar index could give us a high taken here. So we get a little bit of a strength in the dollar in the next couple of minutes. After that high is taken, price just starts to push short. That's all I'm really looking for. Something like that for me is more than enough. I think that's good enough. We can get some work done with that. Okay, that's kind of like my view on taking this. Okay, so if the price can give us the high taken over here right now, I'll be very happy with that. And then after that will be a good enough trigger for the price to break down short. Now, this high over here had a lot of meaning because just like what I said with gold right now, finishing off over here, we got these three highs right here. These three highs, I call them a 3-point liquidity void because the price gave us a sell order aggregate or a sell type signal. If you're a trend line trader, it's got a sell here. And then price looked like it was going to continue and it broke straight above and took all of these highs. All right. This is a perfectly engineered price action trend line. All right. And the price took the high, but the body still stayed beneath, which is good. So this is why I'm of the opinion that the price would want to definitely do something of the sort of trying to, you know, come back here and then break down. So that's all I'm actually waiting for. If I be real myself, that's really what I'm waiting for. I'm just waiting to see the price give us something of that sort, and then I'll be on my way. Now, I hope that this works out. And it does look like it's working out because from when I spoke about this afternoon, the price has climbed quite a bit and is getting close to the high right now, which the highs are equal anyway, which does help the situation. But the price is pushing up here and climbing. And again, with the dollar index and the US 30 in this case, trust me, the price can move too late. So I'm not putting it past the price to do something, you know, a lot soon, into the evening in the UK time. Okay. So I'm gonna stay tuned and see what actually happens first, and then from that I'll be able to kind of make the decision on what to do. So far so good. And then from here we'll see what happens. Now, in terms of news, guys, I just want to give you a heads up. There's nothing exciting happening today or tomorrow. So, I mean, this high impact news, they may use it as an opportunity to do something, but you already know how Fridays can be, guys. So Friday for me, I'm not really so fussed about, but we'll see what happens anyway. Okay. So that's my update for the last 2 days, guys. And if gold plays out, just to recap on what gold looks like here. All right, so gold is what we're looking for. My trade for the day is that we need gold to pull back into this order block. Anywhere inside of here, stop loss in the range as I've shown you, long up to here. Yeah, that's my signal for you guys. All right.